Hello everybody, welcome back to the channel. I'm going to go ahead and give you a massive update here. Pretty much in the last video we explained how at this point we were reaching extremes and the market was about to sell off. In this video I'm telling you that it did happen. If you can see here, the S&P got rejected. It touched the 4,000 area. It hovered around just a few plus or minus like 5-6 points. And then at that point, it got slapped and sold off. If you can tell here, this is the biggest rejection I've seen in quite a while. Out of all the wicks up here, besides the first one, this is the biggest rejection so far, especially for how massive the candles were. Everything started to rally. You saw all the meme stocks, everything just rocket, right? So you want to be careful with that just because it does tend to lure investors in and you don't want to get caught short-sighted, because usually if it's heading too hard one way, more than likely what you're going to see the following day is something else. But hey, I've just been here a couple of years, right? So anyway, what I wanted to go ahead and talk about is how the VIX is actually starting to spike up. If you can actually see here, look at this. It went ahead and made the first low right here. I'll go ahead and draw it out. And then it went ahead, got a little rally, came back down, made a bullish divergence right here, right? So more than likely what you're going to see next is a hardcore bounce. Whether it gaps or not, who knows? But it's starting to make a move. You can tell here, this is the daily. Look at that large wick that it's starting to get. The VIX is not done. It is not out of the fight. And usually it has a really good correlation with the S&P 500. If you can tell here, when we go ahead and overlay it, look at that. It's starting to turn as the VIX is starting to spike up. So usually the indication to this is, if you already see here, high VIX, low stock market, and low VIX, high stock market, right? So usually opposite correlation, great to know. And along with the dollar actually started to spike up overnight. This is just because of the Japanese 10-year bond. And so what that ended up doing, I'll show you here, is they did nothing. So remember, it takes trillions of printed money, which is what they have to do in order to have yield curve control. And so whenever they do that, they have to sell off other bonds or something, right? So in that case, what they're selling off right now, I think it's either treasuries or bonds, but it's the United States. So what they're doing is they're selling that off, buying their own currency to try and stabilize it. It's not going to work forever. It's a matter of time, and it's like a ticking time bomb. So if you know how to look at this, you know how to benefit from the market. Just look at the 10-year bonds, what they're doing, JP10Y, and whenever this starts to spike, because this one originally made like everything start to, I think it was sell off, but this one, oh man, this was a fake out. This was what I was watching. And then the moment it started to do this right here, I saw the dollar start to rocket. This was overnight. And let me see. Yeah, look. The moment it started to gain strength, right? Right now, yeah, it has sold off a little bit after hours on the market, but check this out. So we're already starting to see a turnaround here. Let me go ahead and get rid of it. That way it doesn't get in the way. So look at the S&P 500. Usually in the previous times, I'm expecting the worst here, just in case it wants to do something dumb like this and then fall. But if it actually wants to go, it'll start dropping hard. It is right now. Like, it made a big wick down, rejected 4,000 hard, and look. Ironically, one of the YouTubers, into the cryptoverse, Ben Cohen. He says every single slap has happened on a Tuesday, which if you actually point to the day, look, Tuesday, Tuesday, Tuesday. Ironic. Wait, no, hold on. Tuesday. Yep. And yesterday was Tuesday, right? Yep. So weird. But hey, turn around Tuesday. Let's go. Look, we're almost there. So if it decides to go ahead and BS, or if it wants to go straight down, that's awesome. You just want to go ahead and make sure that you're not short-sighted, that you see the big picture, because a lot of people pretty much got caught off guard here. A lot of people took a loss. We try to warn you. I did post a video saying, hey, this is a trap. Even as drastic as it looked, we were just extremely oversold. It was time to go ahead and correct. What I look at is the dollar, the VIX, and that's pretty much it. For correlations to see how strong our currency is going to be, I look at the others, like the euro. That usually has an opposite correlation, and ours. And then I compare it to risk assets, the S&P 500. And I make sure, one of the biggest things that I want to make sure is usually they all make the same moves, but if something starts to diverge, there's a gap like on the NASDAQ, like usually it goes back and fills it. So don't get caught short-sighted. Sometimes you get a rally in the middle of a bear market. But we're about to see a strong crash here at some point. It is going to retrace, especially for Bitcoin. If we have not, let me go ahead and change that. Whoa. Okay. So we're getting something like this. If it decides to drag out, it'll go ahead and do something around this area. But if not, it'll go ahead and break through right here into the support areas. I don't know where we're going to stop, but this is going to be the area right here. This is between 8,000 to 14. How long we stay there? It might even just go to like a brief 13,000 right here. You see how short that would be? So it's important to stay vigilant. If you want to set buy limit orders, this is not financial advice. Nothing on this video is. It's just to show you, hey, we called this extreme. We knew that it was going to reverse. And no matter what they were saying, like, think about it this way. They were using Jerome Powell getting COVID as the reason for the sell-off, or at least part of the reason. Like, come on. At the end of the day, they're just feeding you noise. Like, stop listening to the noise. The charts, if you look at them in a way where you're not emotionally involved, you can't get emotionally tied to assets and understand, hey, things may just be oversold and undersold in certain conditions, and maybe this is good opportunity and it's a good time to maybe put in a few dollars and give it time for it to brew. And usually it does the opposite of selling off once it's like oversold for quite a little bit. So be very careful. Right now we're overpurchased on Bitcoin. If you can see, it's in extremes. If it wants to drag it out, it'll do something like that. If not, it'll come back down. But either way, look where we're at. And opportunities are coming very soon. Take advantage of them, because I do believe that that may be the last. I'm not giving financial advice, but I do believe we are going to get a short squeeze just because we're not there yet. When the Fed pivots, that's usually when it indicates a market sell-off. When the Fed pauses, it usually is indicative of a market rally. That's what I know from history. That's like how I know what to look for. And that's why I'm thinking that we're about to get a very big squeeze. How high we go, I don't know, but I do know what to look for, and that is the Fed. So for updates, just go ahead and subscribe, like the video. That way it pushes it out there, just because it is free knowledge that I do give to like anybody. It's better to know more than less. And right now, it's almost there. So good luck trading. Like and subscribe. Let me know if you have any questions. But yeah, have a good day.